Hi guys, welcome back. So in today's video, we are going to go over a little bit of entries and exits as well as fundamentals. So in September, I've been trading for about 10 years. I got introduced to this industry around 12 years ago. So it's been quite a journey. I've learned a lot of things. I've learned a lot from my mistakes and what I've learned over the years. And really what changed for me is when I figured out my own system. I used fundamentals for about 4 years, and then I realized that they were actually affecting my trades in a bad way. And so I ended up dropping fundamentals completely and started doing technicals. So I have figured out a system where technicals are basically driving the market. I figured out that fundamentals are honestly a distraction, and that's just my personal preference. I found that a lot of news events are already priced in, so I completely go with technicals only. So I will explain that in the next coming videos, and we will explain why the fundamentals doesn't matter based off what I'm about to show you. If you want to use fundamentals, you can use them as an extra confirmation. But if you're finding that you're not entering a trade before news, or you're entering a trade after news, or the news is affecting your bias, you really want to reevaluate that. Trust me. So looking at USD CAD, I chose a week where there were some fundamentals, and I'm just going to go through pure price action with you guys. So one day I will get into imbalances because I do them differently than most people. When I see an imbalance, I see a surge in price. So it's breaking below a specific price, and it leaves basically the space. So it's a surge of sell orders, and essentially when it's ready to return with buy orders, this whole area from this price to this price has to fill. So they're not only easy entries, but they're easy targets as well. So looking at USD CAD, obviously we can see this is major structure, and obviously we can see this is an imbalance. So what happened here is it came to the minor middle structure in between here. And so again, when we're drawing the zone, we want to attach the price and attach the price here. So I always use two prices just in case one does not react. So as you can see, this react, and a lot of people would be taking sells here. So I always tell people to get in on the second reaction. When it first comes up, it never fully drops. It actually reverses. So I tell people to get in on the second or third reaction because I find that that's when the biggest drop happens. However, since this is in minor structure, basically what ended up happening is, let's say, for example, we saw a surge in price here, and eventually when price is done filling the top, it will actually come down and fill this surge in price of buy orders. So we would put our stop loss above. Your stop loss is such a personal preference. It depends on what time frame you're entering on. I highly recommend entering on between 1 to 10 minutes. You can enter on the 15 and 30. It really just depends on how much price action there is, and I will explain that. So let's say you took it at the second reaction and you were thinking this is your target. Basically what's happening here is we have minor structure in between here. So as you can see, so we have minor structure in between here that's not breaking. So let's say 251 and 204. So let's say 251 isn't breaking. Then that's our indication that if it comes down 1, 2, 3, that it's going to reverse. All right. So sometimes that happens, and the bigger picture is really looking left. There was a massive surge in price. So this is an indication that it's going to go back up to the major high. And it usually always does this, like 95% of the time. All right. So essentially what happens is it starts to break above and it goes to that major high. All right. So we're looking for two reactions here. Once it hits our major structure on the 4-hour time frame, we want to drop down to the 1 hour or the 30-minute to kind of get more price action at that number. So we have a 87 and a 42, let's say, okay? So this is our first reaction. The second reaction is coming in, and then it starts dropping. Okay, so we want to try and get price action on this. So as you can see, on the 1 hour, we can't really see much. On the 30-minute, we can see a little bit. So this was the first reaction. This was the second. But to be able to get in, we want to break it down further. Okay, so on the 15-minute, you can see more. You can see this is the first reaction. This is the manipulation phase. So the reason for that is because of the fact that they're doing two things. People are going to sell at this first reaction, and they're going to think this is going to fill immediately. They're going to put their stop loss super close, and then they're going to get stopped out. Another thing that they're doing is people are going to buy. They're going to put their stop loss below, and they're going to expect this to go in no man's world. And basically what happens is it goes up for a little bit, and then it reverses. The reason for that is because they're trying to absorb as many orders as possible, number one. Number two, the time sessions are changing. So you can use this time session tool if you would like to. It's Lux Algo or Algo, however you want to pronounce it, depending on what country you're from. It's a sessions tool. So you can identify each session. So this is the green is Tokyo, London, and then purple is New York. So every time London is the push, New York is going to be the opposite way. So at the first hour usually of New York, it's going to act like it's going to keep going up. 99%, it doesn't keep going up, especially when it's at a major structure. So if we look left, we can see that this is a major reversal area, right? So we're not going to keep going up unless this were to fully break the price and test in. But like I said, 99% of the time, New York is always the reversal, especially when it's at a major reversal zone. So this was a major reversal on this side, right? So we want to match it up with what happened there. So that was the previous month. We want to match it up. So we're going to look for sells. So to get this price action, we need to drop down lower. So on the 10-minute time frame, we can see that this was manipulation. Now, I don't really get wick entries. I find that you're like staring at your charts too much, trying to get the wick entries, and it creates anxiety for no reason. And you're just constantly looking at the charts. You can still get a good entry, a really precise entry, without having to enter on the wick. So I let it manipulate first, and then once it starts closing, we have our prices here at 36.86 and 36.042, right? So that's what we're paying attention to. We're not paying attention to bearish engulfings. We're not paying attention to friggin' dojis. We're not paying attention to any of that. We're taking this sell from the left of structure because we know it's a big drop, and we're watching the numbers break, okay? I know this is a very different way of doing things because majority of people are not taught this way. Majority of people don't even know about this, all right? So we're focusing on prices to enter on, not candlesticks. We're just watching the reactions of the candles. That's probably one of the hardest things that you guys are gonna have to learn is the reactions and not the strength, not the patterns, not any of that. If you guys have trouble with the strength and engulfings and stuff like that, I actually recommend to change your candlestick colors to one color. And then that way you're not focusing so much on the candles, you're focusing on the price. All right. So I'll show you what that looks like after. But essentially, okay, so our two prices are these two guys. And so we're waiting for a price to close below. Now we want to get that price action to be able to enter. Okay. So even the 10-minute doesn't give us enough. We're going to jump down to the 1 and see if the 1 minute gives us enough. Okay. So as you can see, this ends up breaking and testing that 86, and this ends up breaking and testing. So it's staying below the 42, let's say, or the 40, whatever. So we have an opportunity to enter here, okay? So we have an opportunity to enter at the 36.86 or the 36.40 area. So let's just say we decided to do this because we were more confident, right? So your stop loss can be anywhere. I like mine to be higher, but it's totally up to you. It depends on what time frame you're entering on, depends on your time execution. Time execution is extremely important, and that takes a lot of practice. It's not easy. So this is going to be our entry point. Now, you do not stay on lower time frames for your target. That's where people go wrong. So there's so many people that think they know how I trade on Instagram, and they'll be like, oh, you're scalping because you're entering on a lower time frame. No, you're dropping down to get more price action. And then once you get that entry, you're going right back up. So we're going to go to the 1 hour and we're going to identify where our target's going to be. You can't even see this guy because it's so low. But the point of that is we wouldn't be able to enter on this candle. We have to break it down and then enter on a lower time frame, then go back up. So we're going to look at our targets, okay? So our major target, let's just see here. We're just going to look left here. Okay. So our major target is going to be near this, this 513 mark, okay? So we have, let's just measure this for a second. This zone is about 60 pips, okay? So we see some minor reactions in between here. So we want to identify them. So we want to have one here. You can have two as well, just in case they don't hit. So you can have two, you can have one, and you can have two here. It's totally up to you. What this creates is confidence, and it makes you comfortable to hold the trade. Like I said, you want to try to swing trade or at least hold for a couple of days because it's quality over quantity and less is more in this instance. And I promise you it works. But again, like when you're a beginner, you want to try to take trades and practice, but as soon as you get that experience, you're only going for the good quality setups. All right, so technically our major structure is, our major target would be here, right? But just in case it doesn't hit, we want to follow through. Yes, it's going to be not the best risk to reward. I always tell people to aim for at least 1 to 3 minimum because it's worth it that way. You should, as you get experience, you should be aiming for 1 to 5, 1 to 10 easily. But it depends on the years of experience you have, and it depends on how fast you grasp it, right? So, but 1 to 3 is the minimum. But we want to just make sure these two prices break, right? So we have 803 and 775 in place. We want to make sure those two break, okay? So getting this price action, we can drop down on the 15. Okay, this broken test, perfect. This is ready to go. It's closing below these two prices. Okay, it's going to go to the next, right? So these two prices have to break. So let's say the 630 and the 618 or whatever you want. You can even have one price in here. It really doesn't matter. But those two prices have to stay below in order to arrive to the 35,515. All right. So it's like almost to the 515 and then it ends up reversing. So if we go on the 30-minute, we can see that it ends up closing above, okay? So if it respects the structure, it still has to break below. Okay, so it tries to break below and it closes again. So that would be an indication. So as you're extending, obviously, your target, as you're extending this target, obviously we want to try to aim for this. That would give us a 1 to 5, right? But if it's not going there and you can see one reaction, two reaction, it's once you get that second reaction and it can't close below, it's going to reverse. The reason for that is because New York session is done and Tokyo is going to come in. So Tokyo is going to be the opposite way. And sometimes it can, like if it keeps breaking above structure, sometimes it can go up to this major structure again because you have to think of it in this session way. New York added orders at 3686, 3640. Okay, it added sell orders at major structure. Tokyo is not going to sell orders at 135, 626. They're going to bring it back up and they're going to put in a ton of money at the best price possible, right? And so that's what it comes down to in the most simplistic terms. I'm very, very simplistic when it comes to explaining this. So it's going to come back up. Well, if it ends up breaking, I actually don't know. So if it ends up breaking these prices, it's going to come back up. So it stalls at 135.8. It comes back down. And then this is when Tokyo is coming in. Yeah, so these 2 hours were Australian time, Sydney session. So I don't really put that in because I don't trade Sydney, but you can if you want on the session indicator. So it comes in. If we break below here, though, it could continue. Let's just see. No. So it retests this 680 point that we have, and it looks like it's going to break. Yeah. So, and then it closes above the 775. So when you figure this out, it's going to take some time, but as you figure it out, you want to make sure that the structure is hitting your zones and numbers. If it's doing that, you're on the right track. That is the key, that you're on the right track. But give yourself some time to understand, obviously. So yeah, Tokyo's reversing it, and it's because they're going to add orders to the top, or it could break and test and continue. That's also an option. So let's just see what we get. No, looks like it's going to drop. Okay. So it comes back to the 3640, right where we took this entry. So essentially what you would want to do is you would want to get out of this trade. You wouldn't want to hold it because it's just not worth it. Once you see that second reaction come in and you know that New York's done and a new session is going to come in, usually that's the reversal. And you guys can practice that when you're back testing as well. But when it closes above that price, we would get out here. So that would technically be a 1 to 4. Okay. But the beauty of this is you can re-enter at the same exact price. So again, we can't see this on the 1 hour. We can't see this. I mean, we can see this on the 30, but it's not enough to enter. So we want to go down. Okay. So if we go on the 1 minute time frame, we can see a lot. So let me turn off the session tool quick. So it comes into price, it comes into the 36.50, and then it ends up breaking and testing the 46 and the 42. So that same price we entered on, it's just a simple break and test. We enter at the 42, we put our stop loss above. You could even do like a 1 pip stop, but again, I like to make it bigger just in case it spikes. But on the 1 minute, you can do tight stops, and sometimes they work out very, very well. It's just you have to count the reactions, right? So since we already had 2 reactions on the left on a higher time frame, this is the third reaction in. All right. So we would get in on the third reaction, put our stop loss above, and then go back up to the 1 hour. And again, you can't even see this because it's so tiny. Okay. So yeah, so technically you could put your stop loss like even above here. I would probably do it at 10 pips to be honest, but that's just me. And then we're going to follow through. So the same targets. So we want to make sure the 803 and the 775 are breaking below. So do you notice how we're not going off candles? We're going off price. We're focusing on price. That's the most important thing, which 90% of people do not. And so again, you want to go against what 90% of people are doing. So we tap in here and we want to make sure this fully closes. Obviously, we can see this fully closes. And to get more price action, you can keep going lower. Okay. So this is basically, it tries to break above, it fails to, it tests into this minor area right here. It ends up rejecting and then continuing down. So you can go down on lower time frames for further confirmation. So these 2 prices need to break below. Okay. So obviously it hits our target at 515. And so we can go back up on a 4 hour time frame and kind of reevaluate the situation. We know that this is a strong zone, right? So that 482 and 515 have to break below. All right. Oh, wow. That was fast. Okay. So it ends up breaking below. So it ends up correcting a little bit and then it ends up friggin' tanking. All right. So looking at the 4 hour time frame, we can kind of see our levels here. So Obviously, our next target here would be between the 250 and the 204. Okay, so obviously that has broke, right? So now, like I said, this eventually will come down and fill. That's exactly what it's doing. Okay, so this would be our major target here. And then we would identify the specific prices. And then if it went down further, our next kind of area would be in here and then in here. Okay, so again, we're looking at 749 and 743 are our next areas. Okay, so these two prices have to break. So all you're doing is looking left and following through. That's it. And obviously, I know it might look easy because I'm doing it, but it's because I've been doing it for so long. So I know what to look for. But as soon as you practice this and get used to it, it makes so much sense. And it's so simple compared to most of the things that you've learned. Okay, so these two prices have to break. Now, okay, let's go to news quickly. So this is at New York time. So this is at my time. This is basically 7 a.m. 7 a.m. is my time, New York. So that first hour seems like it's going to go up and then it reverses normal. So during New York, we have to, so this is March 20th. Let's just see if we have, I used to use this investing.com calendar when I was using fundamentals. I think it's great, but I don't use this anymore because I just explained to you like the technicals of it. We weren't even focused on news. So that's what I'm saying. You don't need news. Okay, so let's just say the 20th. Let's just see if we have anything in here. All right, so we have some USD news. This was at 2 o'clock in the afternoon. And then we have, we have positive crude oil at 10:30. And we have no CAD news today, okay? So, or on that day, right? So we have no CAD news. Wait, am I looking at the right day? Yeah, 20th. We have no CAD news. We just have USD news, which was positive on crude oil, which obviously it didn't matter. But anyways, so there was no CAD news, nothing like that. All right. So the fact that we took this trade, so again, it lined up with technicals. It ended up completely dropping, right? So we had nothing to look at. Sometimes there's even news where, for example, on the 19th. So let's look at the 19th. The 19th was right here, okay? So it said that the Canadian, so this was basically negative, all right? So, and you guys can look at this too. You can click on the title and it can kind of tell you what it's about, the consumer price index, and it'll say stuff like, where is it? A higher than expected reading should be taken as positive. A lower than expected should be taken as negative for the CAD. Okay, so this was negative on March 19th, okay? So if that was negative on March 19th, here, let's see what time that was exactly. March 19th. That was 8:30. Okay. So that was basically in between here at this time. So right between here. So the CAD was negative. So if they're thinking, okay, the CAD is negative, blah, blah, blah. This is when they catch people. They're going to catch people into buys based off news, and then they're going to get screwed because of the fact that technical shows it's bearish, right? So trust me, guys, trust me. Okay. So yeah, so this is driven without fundamentals and just technicals. Okay, so these two prices need to break in order for this to continue down. Now the fun part, you can go to the daily and kind of see like how far this is going to go. Now on USD CAD, it tends to range a lot, and it's just because it doesn't move as fast as GJ and other pairs, especially futures and gold and stuff like that. So it tends to range a lot. So there's a lot of areas that it can go to, and that's normal. But basically, if you want to kind of see, okay, well, if we pass this price, then we can see this daily range down here or even here. So it kind of gives you an overall picture. So if we break these two prices, it will continue down. Okay, so it continues down to our next area. And if we had our prices in here, we could see. So then our next target would be 617 or 580. And then you would completely extend it. And as you can see, it tested into those two prices and then it ended up reversing because now we have a surge of sell orders that need to come up and correct. Not only that, we have eventually Tokyo coming in, right? So we have a New York drop. This would have been a 1 to 12. Okay, so this would be risking, let's say 11 pips. I had it at 10 pips, but whatever, 11 and a half pips, 143 target. And that only took 143 pips, sorry. And that only took 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16, 17, 18. Basically a day. That's it. To get 143 pips. Now on GJ, however, or gold, this would be way larger. This would be like 300 pips to 500 sometimes. But the point being is the longer you hold, the better. Now, if you weren't to hold this long and, you were up here and you were on the lower time frames like the 10-minute or the 1 minute or the 5-minute, there's so much price action in here. You would have got out way too soon. And that's what I see a lot of people do is they get out way too soon and they don't take full advantage of the entire setup. So you want to make sure when you take your entries, you jump down on lower time frames and then go back up to the 1 hour or 4 hour time frame. And then as long as these prices are breaking, just keep extending the target. Okay, I'm going to end here because it's a lot to take in. I hope you guys practice this. I hope this makes sense. Let me know if you guys have any questions at all. Comment on this video. Make sure you like and subscribe. And you guys can message me on Instagram as well.